Sponsored by New Orleans Distillers, creators of fine spirits and liqueurs. Through dedication to science, art, and passion, blends of tradition and flavor emerge. For you, always locally crafted. New Orleans Distillers, classically Southern.
This week on Wall Street Wrap-Up, job numbers came in with wage growth slowing for December and inflation possibly going lower. Amazon is cutting 18,000 jobs for the company, feeling a slowing of the economy and of its business. And after 13 ballots and 4 days later, a possible breakthrough for Kevin McCarthy's bid to become Speaker of the House. I'm Andre Laborde. We've got these stories and more on this first trading week of 2023. It's Friday. That means it's time for Wall Street Wrap-Up. Hi, I'm Andre Laborde. Welcome to Wall Street Wrap-Up on this Friday, January the 6th. Coming up tonight, we're going to be talking with CNBC's senior markets correspondent, Bob Pisani. Now, Bob covers the markets from the floor of the New York Stock Exchange for CNBC, and he's just written a great book called Shut Up and Keep Talking for the history, traditions, and investing he's learned from both reporting and being on the floor of the NYSE. Bob Pisani is going to be joining us in just a minute. But first, the Bureau of Labor Statistics released the December's jobs numbers, and the economy is growing, but at a slower pace. The stock market enjoyed today's new December numbers because of the soft landing crowd, those stock traders who feel this latest jobs report will continue for months ahead and create a smaller recession. Well, they were certainly happy about today's report. Non-farm payrolls increased by 223,000, and unemployment for last month was at 3.5%. Average hourly earnings increased 0.3%, with labor force participation at 62.3%. With today's job numbers and the economy slowing, the hope is that the Federal Reserve may not have to be as aggressive this year as in 2022 in raising rates. Stocks rallied on hopes of a cooling inflation. All the S&P 500 sectors ended positive for the day. And this week, the Dow Jones ended the week at 33,629, and it was up 1.4% for the week. The S&P 500, they closed today at 3,895, and it was up almost 1.5% for the week. And the NASDAQ, they ended today at 10,569, and that was up just over 1% for the week. And this past holiday season, if you had to travel by air and if you traveled by Southwest, there was a good chance your flight was either canceled or delayed. Now, unlike other airlines, Southwest spent so little on updating their technology, it all started to show this past Christmas and New Year's holidays. The damage to Southwest will not be just in reputation, but it's going to be showing in their bottom line in the next quarter. Amazon announced they're going to be laying off 18,000 of their workforce, which was originally more than originally planned. Now, this will represent about 5% of their corporate workforce. And as interest rates rise and the economy is slowing, all by design, to stop the inflation, more and more companies are announcing either job cuts or layoffs for the year. Well, let's get to our guest tonight, Bob Pisani. He's written a great book called Shut Up and Keep Talking on the traditions, history, and investing he's learned reporting from the floor of the New York Stock Exchange for CNBC. Hi, Bob. Welcome to Wall Street Wrap-Up.
Andre, great to be with you.
When you first got to the New York Stock Exchange, and it was about 1997, covering this beat, not before when you were real estate, when you first got to the floor of the New York Stock Exchange, you had about 4,000 people on the floor. The New York Stock Exchange covered about 80% of the business. What is it like today?
It's different today. The NYSE, what happened on the floor, is a very good example of technological disruption. As you said, when I got here in 1997 in the summer, there were 4,000 people on the floor, and they did 80% of the volume, the trading in all New York Stock Exchange listed stocks. Today, there's maybe 250 people, and they do 15 to 20% of the volume. That's a very noticeable difference. And what really changed was several things, but basically the growth of electronic trading. in early 2003 or so, the New York Stock Exchange bought Archipelago, which was an electronic exchange. The Arca Exchange is one of the exchanges here at the New York Stock Exchange. And the NYSE trading still, the floor trading still, of course, exists, but a lot of the volume now goes through that Arca exchange. So that on top of the change in the pricing made a big difference in the profitability of the overall business. So when I got here in the summer of 96, they were trading in eighths, Andre. Think about that.
Yeah.
The spread was
I
12
remember
and a
the
half
eighth.
cents. The bid ask was 12 and a half cents. Then in 1997, they went to 16th, 6.25 cent spread. And then finally in 2000 and 2001, they went to spreads of a penny. And that generally is where everything is now. That was created much more efficient trading, but it made the business overall less profitable for a lot of people to be involved in. So a lot of changes since I've been here.
Yeah. I guess when you first got there, Dick Grasso was in charge
Yes.
of the New York Stock Exchange, and I don't know if he was immediately right after, but I think John Thain came in either right after. Is John Thain looked upon as more of the savior, the hero, or with disgust because of the fact? I mean, he was the one that kind of moved it towards more of electronic trading.
Yeah, John Thain came in and did what he had to do. He was not a popular figure on the floor because he came in very immediately after Dick Grasso left in 2003 and bought Archipelago, an electronic exchange. Well, the floor guys weren't particularly enamored with the electronic trading because it hurt their business. So understandably, they weren't enamored with, but I think Thain did what he had to do. There was moving in that direction anyhow. NASDAQ was already, it had been largely electronic already. And the combination of technology, of the software, combined with the hardware, enabled sub-second trading. And that's what the public wanted. It was faster. To a lot of extent, it was more efficient. So that combined with the different pricing that how I mentioned had changed, really created a necessity to come in and make some very difficult decisions. And I think Thain did what he had to do.
I guess COVID expedited so many different things. You've got companies like Goldman Sachs, Morgan Stanley, Citadel. Now, Citadel was from Chicago, but it's still, the point is that they've left their home bases of New York and opened up offices, whether they be satellite offices or I don't know if you want to call them headquarters, but they've gone to Florida. Do you still see New York and New York City as still the hub of the financial markets?
Well, yes, a lot of people move to Florida, but don't kid yourself. New York is still the financial capital. And when things head south, you'll still see reporters lined up out front of the New York Stock Exchange. Wall Street is still is largely a state of mind these days. When I got here in 97, the big houses, the Goldman Sachs and Morgan Stanley, were all right in this neighborhood immediately. Many of them, like Morgan Stanley's in Midtown now. So things have changed. The world is a little less centralized, and probably that's a good thing. But yes, don't kid yourself. A lot of the intellectual capital around the world of finance, and certainly in the United States, is still in the New York region.
You were just bringing up a little while ago about commissions, about stocks being traded in eighths and such. Well, today you've got ideas such as high frequency trading. Well, if you buy or sell a stock today, there's no commission. And if you just started in the business, you have no idea that for 100 shares of stock, you could have easily paid $30 or $40 of commission at one time. Do you see high frequency trading? I know Gary Gensler was going in and with the SEC was getting more involved in that. Do you see high frequency trading continuing?
Yeah, I would make a slight distinction between high frequency traders and wholesalers who are involved in taking orders from brokers, internalizing that, and matching buy and sell orders. It's true that the biggest high frequency traders like Citadel and Virtu are also wholesalers, but they're slightly different in terms of the businesses. The answer is no. I don't see things going back. The average retail investor has never had it better. You can look at the fixed commissions that were charged going back into the 1970s at the New York Stock Exchange. They abolished fixed commissions in 1975. But you can see, if you wanted to buy 100 shares of IBM, even back in the 1980s and even in the 90s, early 90s when I got here, you could spend 2% just on the cost of executing that. On top of other things, today you can go on Schwab, E-Trade, and buy 100 shares of IBM for almost no cost. The commissions have been largely abolished because a lot of the e-brokers decided to use commission models to abolish the commissions and essentially go and essentially farm this out. So a company like Schwab, like an E-Trade, decided a long time ago the cost of being in the trading business, the physical cost, the infrastructure you have to spend on it, the technology was so great, it was cheaper to just outsource it. They still have obligations to provide best execution, but that is what happened essentially. Commissions went away because they got paid a fee from the wholesalers, and that enabled them to essentially abolish the commissions. Now, trading like this is not free. Nothing is free. We all know this. There is a cost to this payment for order flow, which is the phrase that is used. But compared to where it used to be, the average retailer is getting a really good deal. If I thought the average retailer was somehow getting ripped off by evil high-frequency traders to some tremendous extent, I would scream my head off. But I know what it used to be like, and I'm telling you, it's a lot better than it was in the 70s, 80s, and 90s when I got here.
A couple of weeks ago in the Wall Street Journal, in the op-ed, there was an opinion of how the SEC is now looking into the Virtu, Citadel, and others. But there was a line in the op-ed that caught me, and it said, if things are not changed, possibly commissions may have to go back to consumers. And I don't know if it was just a wake-up call of going, you don't want this, or is that a possibility?
That's a threat the industry has been using, saying, look, if it makes it impossible, Mr. Genza wants to institute auctions because he thinks people are not getting the best possible prices. It's possible they might get slight improvements, but the disruption that occurs from this auction process is so great, a lot of companies may say, you know what, the heck with it, we'll just go back to charging commissions.
What about when it comes to the New York Stock Exchange, Bob? One of the great things about in your book, you were talking about a lot of the traditions. And I mean, I'm thinking of everything from Jerry the Barber to all of a sudden to the gavel that is being pounded. The block of wood is still from the 1870s of what's going on there. With the New York Stock Exchange now not being privately owned by owning a seat there, but now being publicly traded, are a lot of the traditions of the NYSE going away?
Well, no, yes and no. So, for example, one of the big traditions is around Christmas time, the retired traders come down here again and sing Wait Till the Sun Shines Nelly with the existing people on the floor. We're actually going to do that again this year, January 30th at 1:30. Art Cashin, who's the sort of doyen of floor traders, is going to come back and is going to lead a group singing there on the floor. We still have the annual Christmas party. So, yes, there's fewer people around to do that, but some of the traditions definitely are still here.
Is there still the Buttonwood Club that's still involved, that those traders?
What's happened is COVID has made things a lot more difficult. The Buttonwood Club are retired members of the New York Stock Exchange, and they used to meet usually once or twice a year and have lunch and dinner and discuss old business. They haven't been able to meet for the last couple of years because of COVID. A lot of them are obviously older. Many are in their 80s at this point. But yes, the clubs definitely still exists.
Here's a little bit of a trivia. Bob, do you know when the Buttonwood Club was formed?
Probably in the 70s, as I recall.
Well, you're somewhat close. It was 1962, but it was January 24th. And I have to I confess to you, the only reason I know it was January 24th, it was on my birthday. If it would have been the day before or the day after, I would not have had any idea when the Buttonwood Club was formed. The traders on the floor. I remember when you first started, when they just had a fixed camera, and at one time your colleague Maria Bartiromo was there, They didn't seem to be really happy with the breaking of tradition of having actual reporters on the floor. I mean, I remember very well, and this might have happened to you too, while Maria was doing her stand-up, traders would be walking, and they would just by sheer hitting, brushing her while she was live on camera. Did you find it was hard to break into the club?
There's a whole chapter in the book about my relationship with Art Cashin from UBS, who was with a different firm at that time. But yes, when you got there, it's hard to describe what it was like in the mid 1990s. It was like a fraternity, a very exclusive fraternity, a club, a private club. It was literally a private club. It was a mutual association. It was owned by the members. You had a seat. There was a luncheon club upstairs that had a huge business every day. And so it was a very elite organization. And to get into that organization, they had to trust you. They didn't particularly trust reporters. They didn't know many of them. So it was difficult, and a few people, including Art Cashin, kind of stepped up and really helped me out, which I'm eternally grateful for, and said, "Hey, you can talk to Bob; he's all right." They just wanted to make sure that they could say things to you that wouldn't necessarily get them into any kind of trouble at all. So I had to figure out a way to report the news. In theory, there was a whole piles of potential information that was on the floor because there was a lot of trading being done. But if nobody's going to talk to you about it, it's kind of hard to get through that.
Yeah. In fact,
when you're reporting.
As initiation on I think, what was it, on your first stand-up, one of the guys came up seconds before you were about to start and said something to you about.
Yes. Well, it was actually it was Bob Zito, who was the head of communications here on my very first day. And Bill Griffith, who was the anchor at CNBC, said, "Okay, let's go down on the floor to talk to Bob Pisani, Bob." And just as he came down and tossed to me, Bob Zito handed me a piece of paper. It said, "Your fly is down." And I looked at the piece of paper, and now I'm on camera. I'm looking at a piece of paper. I'm looking up, and I'm thinking, "Oh, heavens, no, this can't be." And my fly was not down, but that was and they were hysterically laughing all around me. But that was their way of saying, "Welcome to the New York Stock Exchange."
When you talk to traders in Chicago, of the options traders and such, there's a lot of superstitions. I mean, so much so that, let's say if you did well on a Monday, you may wear the same shirt Tuesday, Wednesday, Thursday throughout the week because it was superstitious that they didn't want to change shirts. Is there superstitions like that for traders on the New York Stock Exchange where, you might be wearing the same shirt?
There was, and there used to be all sorts of crazy things that people believed in. A lot of that has sort of gone away as the population has thinned out. One of the things people used to love doing was called powdering, where they would have special guests on the floor, and they would, parade them around and treat them. And then when they were around a bunch of traders, they would take some talcum powder and throw it on their shoes. This is obviously for men largely. And of course, they were horrified, and they would begin stamping their feet to get the powder off of their feet. And the traders would stand around them and start dancing, going, "Hey, hey, hey," because they're stamping their feet. And everybody would go, "Hey, hey, hey, hey." And it was a big joke. It was called powdering. And it was one of the funny things to see. It happened with very famous people, some of whom didn't like it. I know Kirk Douglas was very upset when they powdered him one day. He came on because he had some beautiful leather shoes, and they put talcum powder, and he starts dancing, and the whole floor starts dancing, and he was not happy about it. But there are all sorts of strange little traditions.
At one time, the opening bell was just done as a formality by the people who run the NYSE. But today, you have maybe CEOs, you've got politicians, but you've also got celebrities. You've got people that are movie stars, as you just said, Kirk Douglas or others. So you got to meet some very well-known people. There's an old saying, never meet your heroes.
Well, the saying is never meet your heroes because you'll be disappointed. That's an old journalism saying.
They put their pants on like everybody else, right? Yeah.
Yeah.
I remember when you, being a journalist and watching the evening news with Walter Cronkite, it turned out that instead of you giving him an interview, he started turning the tables and started asking
Walter Cronkite was, it's almost a name you have to be of a certain age to know anything about. And when he turned against the Vietnam War, Lyndon Johnson said, "If I lost Walter Cronkite, I've lost America." That's how influential he was. He retired in 81. It was sort of a forced retirement. He was 65. And I was a little concerned because he'd been very critical of what he called opinion journalism. By then, cable was starting to pick up. CNN was around. CNBC had been on for 10 years already in '99. And he'd been critical of some journalists providing commentary other than just straightforward news reading. And he turned out not to be that way. I just walked up to him and I said, "I'm so happy to meet you. You had a big influence on me. One of the reasons I wanted to be a journalist because of you." And he said, "We didn't do much with the stock market when I was around." He was amazed that CNBC was the hottest thing on television. He said, "What's that like?" And I thought to myself, "Oh my heavens, Walter Cronkite's interviewing me. This is the greatest thing ever. This is the coolest thing." And it wasn't even on camera. We were literally on the floor, and I didn't care. I was just so happy to chat with him. I met Aretha Franklin. She came down here in 2008 during a very difficult period. It was awful. Remember, that was the great financial crisis. For Christmas, she had a Christmas album out. And one of the things I've discovered about a lot of people, if you want to impress someone, leave an impression about you, find the thing that they really care about. And ask them about that, and they'll remember you. She cared about her legacy by then, and there was a movie out called Ray about Ray Charles, and I said to her, and I did this on camera, there's this new biopic out about Ray that's really doing really well, and it's all about how Ray Charles helped invent soul, but you helped invent soul music too. Are you interested in sort of doing something like that? And she said, "Well, thank you for asking. I'm really interested. I have a team. We're talking about it, trying to put it together." And she went off on this and got very animated. And after the interview, the manager came up to me, her manager, and said, "I don't know what you said to her, but she's not normally going on like this." And even after the interview was over, she was talking to me about it. He said, "Whatever you've asked her, you've really got her interested." So what she was concerned about was figuring out her place in history. And it took her 14 years. That Aretha Franklin biopic finally came out a year or so ago, and unfortunately she passed away before it was completed. But that's my point. You find what's really important to people. I did this with Robert Downey Jr. He was coming on the floor.
I was going to ask you about Bob Downey, especially with his quote, his handlers, his PR people. But please go ahead.
Yes.
Yeah.
Well, he was promoting Iron Man 3, and what happened was movie stars have become difficult to talk to because, especially when you're dealing with these superhero things like Marvel or DC, they're such huge properties now that it's not the actors that matter, it's the property itself that really matters. And the handlers don't like them talking much because if they say something that's a little odd or weird, it could damage the brand. That's what they care about. So Robert Downey was coming on the floor to ring the opening bell for Iron Man 3. It was already a huge franchise. And his handlers, not the NYC, the handlers came up to me the day before and said, "Robert Downey Jr. is ringing the opening bell, and he's going to come down, walk through the floor, and go off, and you're not going to talk to him." I said, "Well, I'm standing here on the floor, and maybe he'll come by." And he said, No, he's not going to say anything. He's not giving interviews to you or anybody else. He's just walking away. I said, "Okay, fine." So this annoyed me. I went home, and I collected comic books in the 60s. I have the first Iron Man. I have the first Avengers comic. I had them still in my basement. So I go down, I go back home, I come back on the stock exchange. He rings the opening bell, he comes down on the floor, and there's two guards on either side of me because they want to make sure I'm not going to stick a microphone in his face and say, "Hi, Robert," say hello. So they're there, and he's walking by, and I hold up the first Iron Man comic book. And I said, "Robert, do you know what this is?" And he stops, and he's 15 feet away from me, and he said, "Is that the first Iron Man?" I said, "It sure is. Come over here and say hello to CNBC." And he came over. We got the interview, and everybody was happy. And it wasn't terribly, insightful. He just talked about working on Iron Man, how happy he was with it. He walks away, and the PR people, his PR people, come up to me and say, "We told you he wasn't talking to you." And I said, "Oh, you told me. You just didn't tell him. He didn't get the memo." So there's my point. Find out what really interests somebody, and you can get them maybe to pay attention to you.
And Bob, you also did, what's the first law of broadcast journalism?
Well, the first law of broadcast journalism is "thou shalt make air."
Thou shalt make air.
And that's there's a whole chapter, appendix in the back about maxims on television and life, and that's number one. Thou shalt make air. And you better figure out a way to get on the air, or otherwise it's a long run. It's not going to matter.
I would think that when it comes to being on the New York Stock Exchange for so long, you've got friends, you got family, you go to parties, Christmas parties, whatever, and sooner or later they come up to you and look at you and go, "Bob, can you give me some stock tips? Can you give me some stock advice?" What do you invest in?
Well, it's always disappointing when I tell them I don't give stock advice, but I can tell you what I do. I'm a Jack Bogle disciple. Bogle was the founder of Vanguard. Meeting him, and I talk about this in the book, was the most important thing that happened to me in my life. I met him in 1997. I don't trade at all. First off, we're restricted. I can't own individual stocks except the company that owns us, which is Comcast and was General Electric before, or individual bonds. I can own mutual funds and ETFs. And by and large, that is what I own, largely ETFs. But right now, I don't think it should be a surprise to anyone that my biggest holding is the S&P 500. That's a core holding for anybody.
Well, we had such a good time with Bob. We're going to be having the second part of my interview with CNBC's Bob Pisani next week, where we're going to be diving into his thoughts on market timing, mutual funds, ETFs, and investing in the NFTs. Well, if you've got a question about finance or a comment about the show, love to hear from you. Make it pithy or concise and write us at andre@wallstreetwrapup.info. Now for a look ahead for market information for next week. But first, on this day in 1933, the New York Stock Exchange began requiring what information from listed companies? We're going to have that answer in just a moment. On this day in 1933, the New York Stock Exchange began requiring what information for listed companies? Well, the NYSE required all listed companies to have their annual financial statements prepared by an independent auditor. Now, you know budgets are shrinking and the recession is coming. When Goldman Sachs employees returned on Tuesday from their New Year's vacation, they were greeted with this message, that their free coffee perk will no longer be free. Yes, now even investment bankers and commodity traders at Goldman Sachs will no longer be able to get a cup of joe paid by the company. Goldman Sachs' bankers were greeted with a cold slap for a hot cup of coffee after returning from their New Year's holidays with, as one banker called, crappy coffee that was no longer free. Confronted with a sign, and a woman was yelling at us as that was no longer complimentary. And one Goldman Sachs employee said that they went to the checkout counter and actually paid $2.99 this morning for well, you get the picture about the quality of Seattle's best. At Goldman Sachs, employees receive their base pay, but the bonuses at the end of the year range anywhere from $100,000 to millions of dollars for partners. Now, as we now enter 2023 and a recession possibly coming, Goldman Sachs will be laying off a reported 4,000 low-performing staff, or 8% of its workforce. You know, a good way to decide who to be fired first is which employees are yelling the loudest over paying $2.99 for a cup of coffee. Well, that's not a bad price. Starbucks is now known as $4 coffee. Now, coming up next week, we're going to be having our second part of our conversation with CNBC's senior correspondent, Bob Pisani. We'll be finding out about his thoughts on stock analysts, ETFs, mutual fund investing, and his thoughts on timing the market. He's written a great book called Shut Up and Keep Talking. Sometimes a lot of the most interesting areas are not covered on camera. Great way to book on investing and the NYSE. That's CNBC's Bob Pisani, the second part next week. As a reminder, we repeat the show on Sunday mornings. Best way, though, set your DVR so you'll never miss an episode. And that's our show for this Friday, January the 6th. I hope you enjoyed it. My thanks so much to Bob Pisani for joining us this evening. But as always, it's you. We appreciate you for allowing us into your homes tonight. So remember, follow us on all the social media, on Facebook and YouTube, Twitter, and WYES.org. Have a fun weekend ahead with the ones you love and a productive week as well. I'll see you next week. Remember, if it's Friday, it's Wall Street Wrap-Up. I'm Andre Laborde. And remember, money never sleeps. Good night.
Sponsored by New Orleans Distillers, creators of fine spirits and liqueurs. Through dedication to science, art, and passion, blends of tradition and flavor emerge. For you, always locally crafted. New Orleans Distillers, classically Southern.